Welcome to the SDA Housing Podcast, brought to you by NDIS Property Australia. Before starting this episode, we need to provide a general disclaimer. Information contained in this podcast is general in nature only. It does not take into account the objectives, financial situation, or needs of any particular person. You need to consider your financial situation and needs before making any decisions based on the information in this podcast. And you should consider seeking independent and professional advice for your personal circumstances. All right, let's begin.
Hello everybody, my name is Minh and I'm your host or co-host with Matthew from NDIS Property Australia. And you listen to this SDA Housing Podcast, the show that explains, highlights, guides and brings awareness about all things SDA in this ever-changing NDIS world. Matthew, welcome back from your 6-week holiday from overseas.
Glad to be back.
Are you sure? You're lying, aren't you? You're lying. You want to be over there forever.
I love this place.
What is today's topic about, Matt?
Today's topic is about kind of comparing the differences in purchasing a house or land or just a house and a unit.
Yeah. So I guess, this isn't about SDA house versus SDA apartments because really at the end of the day, a house versus apartment is going to be the same argument back and forth, right, Matt? It's the same argument.
Yep.
So we'll keep it very simple. Why do people love houses? Why do people love apartments? The difference between the two, pros and cons. It's just a generic discussion overall because everything we say with regard to a normal house versus a normal apartment also applies to pretty much, I think, an SDA apartment versus an SDA house. Agreed? I would say the one difference would be the income levels. Okay, yeah. Well, let's look into it right now. Let's begin. What's your thoughts, Matt?
Well, yeah, so obviously just the main, I suppose, elephant in the room or what people like to talk about as the big reason for why you'd pick a house is the land.
Yeah, capital growth, right?
Capital growth.
So we've seen the last 10, 20, 30 years, Matt, and whoever's been in real estate probably is increasing value.
Not even that. I mean, just you look at the last 5 years, it's been...
No one ever invests in property for cash flow purposes unless it's really strong yields. We all know that, yes.
Yes.
But as you said, land value, growth, capital growth, all that kind of stuff. So land value, control flexibility, structural concerns, these are all the reasons why, I guess, very generically, why people love houses, I guess, yeah, and compared to looking at an apartment complex, I guess.
Yeah, so just you just addressed control and flexibility and structural concerns. What we mean by that is obviously the control. A homeowner might feel like they have more control over their property. They can renovate, they can rebuild, they can extend without as many restrictions imposed by strata or body corporate rules.
They can knock it down as well.
You
can't do that with apartments, really, yeah.
No. And on that note, when we say structural, we mean, cases in the past where structural
on the news, yes, on the news.
Yep. Where there's been structural defects in high-rise apartments.
And it's a mess and headache for all the body corp owners to be...
It's a nightmare.
Putting money in to physically fix the whole high-rise building. It's a nightmare, yeah. So, yeah, that's definitely the concerns, I guess, from an outside perspective of a house versus an apartment, I guess. But let's dig deeper, Matt.
Yep.
What more thoughts and ideas and concepts do you have to discuss this further, today?
Well, just obviously another factor would be just the mindset of people wanting to have kind of their own property and potentially, away from other people in terms of, I suppose, the ultimately just owning their own piece of land. And coming into that, I suppose, would be kind of the location. While, you might be in a situation where you might be able to buy an apartment wherever you want to. That isn't always the case. I believe there's more locations that have houses that someone might want to potentially buy in a niche area or...
So you're saying there's more readily available houses everywhere around you
to meet what the aspirations of a potential investor.
Yeah, true. Whereas with the apartments, you're limited to what is being built on a mass volume in one block.
Yes, correct. Yeah.
So gotcha.
Another one might be, just depending on the changing market, I suppose, in terms of maybe wanting to move away from the city if it's getting too busy, too congested. That might be, I suppose, something that people might be perceiving.
Yeah. But Matt, true, but I want to go a little side comment. Houses traditionally have done better in their performance, than an apartment.
100%. In terms of the actual capital gains yield, I would say, 100%.
Yeah.
But
So if you love capital growth and love land, go for it. No one's saying you can't look at buying land to build a house. No one's saying that at all. Again, we're sticking to the non-SDA discussion here just to show the mindset of a normal investor of land, houses, and apartments. So we're not talking SDA, Matt, just normal houses, yeah? So what are the main reasons for the poor outlook of Australia's apartment market, do you think?
I mean, we did kind of speak on it in regards to structural issues, but an oversupply of low-quality apartments, which are considered to be generic and, I don't want to go to the extreme of, a communist bloc, but just kind of, I suppose, something which is just kind of doesn't have too much appeal in terms of an investment outcome for the future, I suppose.
You're probably talking those really old...
Or just something which is just,
20 years old, right?
Yeah, or, you've built you've got this apartment and it's not really any different from anyone else's apartment and there's 200 of them, in terms of the long-term investment outlook, is that a good thing?
Yeah. So, you're right. Back in the 2010 to 2018, 10 to 15 years ago, there are a lot of low-quality, cheap apartments being built around Australia. Cookie-cutter style apartments, as you can say, yeah.
Yeah. Which, I mean, that does give people the ability to get into the market, but at the same time, it's like, I suppose that's just a perception that's out there.
But also, Matt, the last 5 years or so, there's been massive cost increases for labour and also costs of raw materials for construction, concrete and timber and all that kind of stuff,
Well, and I mean, that's caused there to be delays, not only in the housing market, but also in the developments market as well.
So I reckon 40 to 50% increase in costs for supply chain issues, labour shortages, surging material costs, that does have an impact on the feasibility and success of a apartment project.
Potential project.
Because of that, no one wants to go into it or jump into it because there's no margin for the developer to make money on, obviously, which causes a domino effect of less construction, more demand, less supply, and then also house and land versus apartments all over again. So, again, a poor outlook for Australia's apartment market is because of lack of product being produced in construction-wise, development-wise, Moving on, what other reasons? Thin pipeline, I guess? Low confidence? Any comments on those?
I mean, I guess it's kind of related to what we were just talking about in terms of builders going under, developers going under, high potential labour costs, and that's leading to a lack of investor confidence, or that a project might blow out so much that it becomes not worth it for the investor or not in alignment with their original aims, and then it's no longer viable.
Yeah, okay. So let's move on to another topic. How does the shortage of residential land impact on apartment prices?
So I believe there's several potential impacts on apartment prices. So if you have a scarcity of land, which we've seen recently, which has driven up land prices significantly, you'd look at a lot higher lot prices, which is obviously a lot of people have been pushed out of the housing market, I feel like, not only for on the interest side of things in terms of repayments, but also we mentioned the labor cost before for builds, but just the land prices. I mean, you're looking at, in some situations, lot prices have increased 23% compared to just 5%, which was the increase 3 years prior. And, this is even in kind of outer suburbs where you wouldn't expect that to occur. So I feel like that would make apartments more appealing in that respect.
But new
potentially, this would be compared to new lots that become available.
Because upward pressure on prices, when you have the supply of residential land, the shortage of which, it causes increased construction costs and reduced new apartment completions is going to create upward pressure on apartment prices, especially in the desirable locations. So the existing apartments out there, Matt, which are lower or cheaper than the new ones, there'll be more appeal because they're easy to buy. They're actually built. There they are. Touch, feel it, and actually buy it. Whereas when you're buying apartments off the plan, you're buying an invisible contract off the plan to wait 2 years.
Hoping. Yeah.
Yep. So you can't really move into it straight away. You can't touch it. You can't see it. It's a brochure, and that becomes a problem,
Yeah.
Regional prices as well, Matt. I mean, there's also price variations of regional prices between regional and metro. I mean, any comments on those things when it comes to land shortage?
I mean, I suppose the land shortage is obviously affecting different areas to varying degrees. Like I would say, when you're going out to the country versus say Sydney CBD, you wouldn't look at probably those increases in prices in lots don't affect the countryside as much, which would push people, and we know this is happening, out to areas outside metropolitan.
Yeah. We saw that with COVID, Matt. A lot of people moved out to country areas.
Yeah, I know that in Gympie, which is near Brisbane, there was something like 4 times the construction was occurring during the COVID period than beforehand.
But with regards to this point I'm raising here with the shortage of land, the impact on apartment prices, the scarcity and the high cost of land for houses will drive more buyers towards apartments as a more affordable option, which potentially increases demand and prices for well-located apartments. You know? So in conclusion, I guess, the land shortage is always going to contribute towards higher apartment prices. If there's no land, you can't build anything, you go apartments. That's just supply and demand, really, you know. But Matt, what is, back to, on the same theme, apartments versus houses. In today's market, is there a right or wrong answer?
Obviously different people have different perceptions and what they want to achieve. I suppose investors tend to be increasingly shying away from investing in apartments purely because during COVID there was a lot of an influx of shoddy high-rise apartments which were built. And I suppose the view is that it depends on the location, the neighborhood, and the size of the apartment. In general, I would say the apartment market outlook can be poor in certain areas if it's cheaply constructed apartment blocks, where as you just mentioned, Min, where the sold site is unseen, and someone might be investing from, say, overseas, and they just have no idea what the situation is, or whether it's cookie cutter, whether it actually stands out in the crowd, that sort of thing.
Yeah. So what are the pros and cons of buying an apartment then, Matt? Can you give me a list?
I mean, I would say my personal opinions is that with an apartment, it's a lot easier entry point, I would say. You're only looking at a small deposit, and you're not paying, typically in most situations, you're not paying an interest rate until, depends on the situation, but in most cases until it's completed, at which point you'd get your loan. But would you have that in a house and land situation? If there's a blowout to the building in your house that you're building and it takes a year longer to complete, that's a huge cash buffer that you need.
Yeah.
This was a big issue that we saw time and time again with the various builders out there where they'd have a situation where they just took a year extra to do a build, and it was ridiculous.
So I want to give you I want to go through these lists, Matt. The apartment pros, positives.
Yep.
And you tell me yes, agree or disagree if it is the same with SDA.
Yep.
Okay. So apartments, normal apartments, they have a lower initial cost.
Agreed. Yep.
Agree with SDA. Yep.
Yep.
Apartments will cost less to run.
I mean,
the SDA apartment, it's same.
Same. Yep.
Apartments require less maintenance. That's positive.
I mean, probably yes.
Yeah.
Probably. Yeah.
Apartments offer more security.
I would say more security and also more privacy for a participant living in the property. They have their own room, they have their own kitchen, they have a spare room for themselves. The carer just sees them, they don't see anyone else in the apartment.
Yep. So another one is normal apartments are often in good locations. Is that same as SDA or not? What do you think?
I feel like that's very subjective.
Okay.
It just depends on the apartment.
Maybe not. Okay.
Yeah.
Apartments can give a higher rental yield. Normal apartments give a higher rental yield. Does this also apply to SDA?
Yep. Yeah. So I would say a lot of people, in the traditional housing market, you would probably make more rent on a house, with a bunch of people living in it,
yes,
than potentially on an apartment. But with SDA, you would have a higher per participant funding amount than you'd have as a per participant funding amount for
very, very true
for a house.
Just to summarize the rental here for an apartment for SDA is between $1,000 to $2,000 a week, which is $50 to $100 a year rental SDA income. Yeah, which is more than a normal apartment.
100%. Yep.
So it is giving a high rental yield. Yes. Now the cons, apartment negatives, cons. Owners have to abide by strata or body corporate rules. That will also apply to SDA apartments as well. True?
Yes. Yep.
So you got to follow the group rule.
And if there's providers, that are servicing the apartment, are you working with them? What's your relationship like with them? What's their relationship like with the SIL? There's a few factors there that are purely SDA as well.
Okay. Normal apartments are more costly to run and maintain. Is that a negative?
I don't think I would probably say the opposite, actually.
Okay.
On my opinion, anyway.
What about apartments are smaller?
Yes, that's true.
Less space means lower bills and less space.
I would say though that, if you're looking at one participant living in their own apartment, sure, it might be smaller, but they have a lot of room all to themselves. Speaking about kind of privacy, and they can do what they want for their apartment. It's their apartment.
Yeah.
Yeah.
And the last one here is apartments aren't as private as houses.
Disagree.
Yeah, it's exactly same. Now, the pros and cons of buying a house. Let's see whether these points are exactly the same as an SDA house as well. House investing pros. Houses offer more space.
Yes. Yeah. It should be the same. Yeah.
Houses increase in value more.
Maybe not as much, but still you would have some capital gains, particularly in metropolitan areas.
Remember, when you build a house for SDA, you're overcapitalizing on the build costs. So you're not necessarily going to have capital growth per se.
Or it's down the track.
Like the rest of the market. Because if the whole suburb is growing at 3% per year, you're growing at 3% per year, unless your cost of your house was already overpriced already because SDA build costs. You know what I mean?
Yep.
So it's a negative territory, so to speak. Yeah. Houses give more flexibility.
Yep, we've said that before.
Yeah.
Definitely true.
Mm-hmm. And that also applies to SDA houses.
Yep.
Houses offer privacy.
I suppose from neighbours it does, but if multiple people are staying in this house, we talk about, if you had a 4-bedroom house, you probably won't have 3 participants in there because it would be crowded to some extent. It's more likely being 2. So I don't necessarily agree with that one.
Higher initial costs. Houses are almost always more expensive than comparable apartments. This means you need a bigger deposit and a larger home loan to buy the house.
Yep. I would also say higher initial cost risk. That's a criteria, just in terms of, you've got your loan straight away and you're banking on that loan only extending over a certain build time and hoping that build time doesn't blow out.
Sure. Houses require more maintenance, exactly the same as an SDA house. Houses cost more to run. So more space and land obviously means more utility bills, higher cost in terms of buying extra furnishings, and appliances. Yeah. So as you can see there, the pros and cons of buying a house, pros and cons of buying an apartment, feels exactly the same whether it's a house is normal or an SDA product.
The only difference I would say would be the funding level at a per participant level. That's the main thing that people don't consider. And my other thing would be my final closing thought would be as well as if you're doing SDA, are you doing it for the capital gains or are you doing it for the cash flow? And a lot of investors, particularly most investors who invest in SDA, it's not their first investment property, and they might come from a position where they've got several properties in the past that are all residential, aiming for that capital gains. And if an investor is in the mindset of, hey, I'm only looking for capital gains, that's how I make my money, then the concept of SDA might be a bit different from that in the fact that it's a cash flow driven investment. That would be something to consider on my show.
That's right.
Yeah.
So the point of this episode today is to talk about openly the comparison between houses and apartments, normal or SDA. It's the same. It's the same reasoning here. It's the same arguments for and against. It's the same, literally. So therefore, when it comes to SDA investments in SDA property, it's no right or wrong answer. It's the same reasons why: more space, more cost. I mean, building a house costs you ongoing costs, holding costs as well. To set the loan and construction costs, there's also risks there as well,
Yep.
So Matt, to summarize today's episode and the topic of houses versus apartments, what do you have to say to our listeners about that very topic? I mean, I'm sure there's no right or wrong answer, but do you think there's a better product of the two?
I feel like the market is shifting more towards apartments.
Why do you think that's the case?
Because looking at, we've discussed it in previous episodes, a lot of the new houses that are being built are in new estates where there might be other SDA properties being built out there. We can do research reports on those, little plug, we can do research reports on, depending on the location, to get that information. But you don't know if someone else comes after you and decides to build an SDA house in that, that estate, that new estate. And so you're competing against potentially other people building out in a cheap location, that might, impact your competitiveness in terms of securing participants. An apartment is they generally tend to be closer into the city, where there's no new estates, there's no building happening, or to the same extent as in new estates. So you are, I suppose, putting yourself into a better position in terms of potential participants who might want to move into your property. Obviously, participants have their own preferences in terms of whether they want to live in a house or a unit, but in terms of being more central and having less other options that a participant might look towards, I feel the market is shifting more towards apartments, I would say.
Okay, cool. Well, I think that wraps up our session today. At the end of the day, investors will choose a product they feel they're comfortable with. There's a demand. There's an actual equal demand, Matt. Houses versus apartments equal 50-50.
Yep.
Of construction of those two. So if you go houses, good. If you go apartments, okay, whatever. There's pros and cons of each. Choose what you're comfortable with, and be aware that there's going to be different outcomes. Yep. Do a house in 2 or 3 tenants. Apartment, it's 1 tenant. Yeah. Thank you very much, Matt. Have a good day. Bye-bye.
Thank you.
We hope you enjoyed this episode. Please make sure you are subscribed and following us so you can keep in the loop with all of our upcoming episodes. We would really appreciate it if you could leave us a 5-star rating, a written review, and to share this podcast with those that could benefit. Until next time, catch you on the next episode.